It's that time of the year again, and a lot of people have tax questions. What if I told you that within the Trump tax cuts, there is a way for all rideshare drivers to reduce their income taxes by 20%? We're going to be taking a look at Section 199A. Now guys, if you like what I'm doing, please like, comment, subscribe. It'll really help me out here. As a quick disclaimer, anything that I say should not be counted as solid individual financial advice. Treat this as educational entertainment. But do take this to your tax preparer, take out your phone, pull out this section, especially with the links that I'm going to leave down below, and ask them to go over it with you. Let's start by taking a look at the background of this bill. So this section was included in the Tax Cuts and Jobs Act of 2017, known colloquially as the Trump tax cuts. Regardless of your political leanings, take a look at what it has to offer you. You shouldn't put everything in the waste bin just because you don't like the person attached to it, right? Now with that out of the way, let's take a close look. This is from Microsoft, and we'll go over this together. I know that the article is old, but then there are newer articles that will back this up. In fact, the amount that you can earn has actually increased. Although if you take a look at the upper threshold, I'm pretty sure that as a rideshare driver, you have not hit these. If you're making over $300K a year doing rideshare only, let me know what you are doing. I would love to talk to you. This new tax law originally kicked in 2018. This is the official name of the 20% pass-through deduction. It is officially called Section 199A of the Tax Cuts and Jobs Act. To put it another way, what deductions can you get? If you qualify, you can deduct from your income taxes up to 20% of your business income. That is to say, this deduction effectively reduces your income taxes by 20%. Who can get the Section 199A deduction? Any small business owner who operates a pass-through business can qualify for the pass-through deduction. Consequently, the vast majority of smaller businesses are pass-through entities. What's a pass-through business? A pass-through business is any company that is a sole proprietorship, which most rideshare drivers will fall under, a partnership, an S corporation, an LLC, or an LLP. What type of businesses can get the pass-through deduction? The Section 199A deduction is only available to taxpayers with a qualified trade or business. Eligibility applies to any bona fide business owned and operated through a pass-through entity, but it does not include working as an employee, specified service businesses that earn over a threshold amount, and businesses owned and operated through a regular C Corp. Employees don't qualify for the pass-through deduction. If you're an employee, you can be eligible for the deduction only if you quit your job and become a self-employed independent contractor. This move is probably not a good idea for most people. Changing your employment status means losing employee benefits like health, insurance, and paid vacation. You'd have to earn enough extra as an independent contractor to make up for the loss of such benefits. Also, you may not qualify for the pass-through deduction if you quit your job and perform the same work for your old employer. Reason? The IRS will presume you're not an independent contractor for the next 3 years. 3 years is a long time to get through. We can go ahead and skip over this section because it obviously doesn't have anything to do with rideshare, but the next section of this article does. Can service providing businesses get this deduction? Specified service business owners get the full pass-through deduction if their taxable income is below $157,000 filing as a single or $315,000 married filing jointly. If your deduction is over these amounts, the deduction is phased out. You get no pass-through deduction at all if your taxable income exceeds $415,000 married or $207,500 single. A few of these paragraphs have nothing to do with what a rideshare driver can or can't do. Let's move on to the next relevant point. How to calculate your Section 199A deduction. The pass-through deduction allows qualifying business owners to deduct from their income taxes up to 20% of their business profit. To calculate your deduction, determine your taxable income. This amount is your total income from all sources minus all your deductions. Obviously, you want to go through everything that you can deduct, and if the standard deduction is higher than your itemized deductions, go for that. If you itemized everything, it could theoretically be higher than the standard deduction. But that's a separate personal issue, and you need to go over those numbers with your personal tax preparer, not some guy over the internet that can't see your numbers. This is very important. Spend that 100 to save 1,000. Makes sense. If your taxable income is below 157K, your Section 199A deduction is equal to 20% of your qualified business income, QBI. That limit is $315,000 if you're married and filing jointly. Thereupon, the end result is the maximum possible pass-through deduction. Example, Tom is single and operates his business as a sole proprietorship. His company earns $100K in qualified business income, and the total taxable income for the year amounts to $120K. Tom's pass-through deduction is 20% times $100K QBI equals $20,000. Thus, he can deduct $20,000 from his income taxes. If your taxable income is within 315K/157K thresholds, that's all there is to the pass-through deduction. I'll leave even more links to newer articles so that you can go ahead and show up prepared. Do not be afraid of going to your tax people multiple days out of the week. This is very important. Don't treat this as a one-day event, dump all the paperwork that you need to, and then never speak to your tax guy again. If you want your maximum refund, if you want your maximum amount of deductions, if you want to Bezos the game, if you want to Bill Gates the game, you need to start playing the game. The reason that you've been receiving lower amounts on your refund checks since 2018 is exactly because of this law. Not because they're stiffing you on anything, it's because throughout the year they're only taking what they actually need. That means every month you're actually keeping more money in your pocket. It goes again to what I keep saying about on paper versus in pocket. You guys need to start thinking in pocket. If you're a major water drinker like me, let's say you've bought cases on cases of water, you're gonna buy them for yourself anyway. Keep one or two in the car for a passenger. If they don't take it, then you're drinking it at the end of the night because you like keeping a fresh bottle of water that hasn't been touched by anyone else, nor has had the potential to be touched by anyone else or tampered with by any other passenger throughout the course of your day. So every morning you keep switching it out until you need to buy more water. Then you deduct the water. That's for your passengers. At the end of the day, it's business waste. You don't know if anyone touched it. Maybe you picked somebody up and they got their little corona fingers on it. If they did, it wouldn't really help you at this point anyway if you avoided it. You've already come in contact with a pathogen. I'm sorry, I don't know what else to tell you. Drink water, sleep in, get some rest, go exercise, eat enough protein and fat so that your cells can repair themselves. Well, I hope that this little video about this little section of this broad sweeping law is going to help you. I'm not saying be a robot and give up everything that you'd have fun with. But if you're going to do something and you want to maximize your potential, it does pay to do a little research. We still have 2.5 months to go, so knock it out. If you want to keep up on interesting news, or if you want to learn a few interesting things, go ahead and click that subscribe button. I'm going to keep making an effort to make my videos look, sound a lot better, be more entertaining, and maybe I'll set up a few interesting fun things here or there. I really hope I'm helping you guys. It's going to be Super Bowl Sunday, so there's going to be a lot of crazies out on the road. So on that note, if you're heading out to work, stay safe. Be good, do well, let's go make some money.